Welcome to the September edition of Around the Market. I'm Mark, and today we're asking, will September repeat its historically poor performance? And as always, we'll break down key indices and market trends. Let's get started. First, let's look at the seasonality of September. I analyzed the monthly closing prices of the S&P 500 over the last 45 years. On average, each month shows 28 positive gains. But September stands out. It's the only month with a consistently negative performance. Looking at the data since 1980, not only do we see more losses in September, but those losses tend to be larger as well. Statistically, September is a tough month for the markets. As we start the new school year, I've noticed that investors are more focused on ETFs than futures. So, instead of analyzing the S&P 500 directly, I'm using the SPY ETF. Remember, multiplying SPY's value by 10 gives you the S&P 500 equivalent. I already added key pivots and Fibonacci levels on the SPY chart. In the last video, I mentioned that SPY could hit the 540-545 range, and it did. But now, the index has gapped up and formed a double top. Short term, it's crucial to hold that gap to stay positive. I set a pivot between 535 and 545. Dropping below this range could mean a potential drop into wave C of 4. Next, instead of focusing on the cubes, let's analyze its top 3 holdings: Apple, Microsoft and Nvidia. Microsoft is looking a bit weaker, with its year-to-date price movement more sideways, and it's currently at its 200 days moving average, while the 50 days moving average is turning down. Nvidia, the leader in this cycle, shows weakness against SPY, trading below its 50 days moving average and first support pivots. Apple is holding its 50 days moving average and is moving in line with SPY. Now, let's move to Europe's main ETFs. Belgium. I've highlighted BEL 20 multiple times, and it remains one of the strongest indices since breaking key resistance in May 2024. And the index is still performing well with making new highs. France. Despite being Europe's top index over the past 2 years, it's showing weakness after forming a double top formation in May. The 50 days moving average is below the 200 days, and we need the ETF to reclaim 37 to reverse this trend. Short term, holding above 35 is crucial. Falling below 33 would be a bad sign. The Netherlands, performing better than the CAC 40, with the short-term average above the long-term. Staying above 89 keeps the momentum going, with a chance to push back above its short-term average. Germany. Like the BEL 20, DAX is performing well. It's holding above its 50 and 200 days moving averages. Staying above 164 a key level cluster is vital. Spain. Similar to BEL 20 and the DAX, IBEX is holding above its 50-day moving average. Key levels to watch are 110 and 106. On to commodities. Crude oil. Last time I mentioned it looking for a test of the $65 level or a breakout above 80-85. So keep an eye on the 65 zone. If it doesn't hold, be ready to exit quickly. For a swift entry around a potential bottom, consider buying an energy ETF. It's easy and quick to trade. I will show some ETFs. In Europe, you can choose between IS0D or EXH1 for oil companies, or CRUDP if you want exposure to oil itself. In the US, XOP and USO are solid options. Gold continues to make higher highs. No negatives here. When looking at miners, GDX, or for a clearer view, the European equivalents IS0E or G2X show a nice cup and handle pattern forming. Here you can see a study featuring 4 of the best small cap performers in the gold sector: Free Gold Ventures, Jaguar Mining, Perpetua Resources, and Skena Resources. Voila! Thanks for watching the monthly review. For more frequently updates, be sure to check out our weekly spotlights, subscribe and hit the notification bell to stay on top of the latest market trends. See you next time.